Hello guys, I welcome you guys to this particular video again, where I'm going to be teaching you how I spot profitable change of characters before I actually take a trade. And it's actually very easy. This particular trade you're seeing on this screen was a trade I took with that, and if you can consistently do that also, you can actually make consistent profits with it. So first off, you want to know what the change of character is, and the change of character is when market moves from an uptrend to a downtrend. So this is the symbol of an uptrend, and then all of a sudden an uptrend makes a higher high and a higher low, and all of a sudden market, instead of continuing the trend, it just moves up, and then before you know, it breaks down, taking out the low that signifies that is an uptrend. In an uptrend is a low that signifies that this is an uptrend. The market takes out that low, it is a change of character. Okay, so we just mark it out like this as our change of character, and then most traders want to look for a retracement to the upside, and then they're going to sell. Now this is the traditional way of identifying a change of character, but there's something unique I want to add to this to make the change of character highly profitable. And what is that? Sweep of liquidity. Most of us might not know what a sweep of liquidity is, so I'll use a layman word to explain that for us. So when you identify the change of character first to the upside, to the downside, is a change of character. The next thing you want to do, instead of trying to sell like most traders, wait for it to take it up, sweep the high before retracing. Okay, most traders will want to take their trade on top this place, but I don't like that. I prefer the market to sweep the high, then change character again, then when it retraces, I'm going to take my trade and sell. So this is just the setup I want to see for my change of character before I execute it. Now let's go to this chart. On this chart here, let me zoom this out. You see how I zoom my candles? So demure. That's by the way. Market moved from here to here, came down, pushed up, came down, pushed up, came down, pushed up, and changed character. Okay, now this is the first change of character, which you shouldn't be looking to sell from. What you want to see is if market is going to liquidate it to the top side, like take it out to the top side. That's why that line is there. And what happened? Market took it to the upside, liquidating everyone that tried to sell at any point around here. So once market takes it to the upside, what's the next thing you want to do? The next thing you want to do is that after market has swept to the upside, it should take out the low after sweeping out the high. And what happened? Market took out the low. This is where I now identified it as my change of character. Now what's the next thing? After identifying the change of character, the next thing you want to identify where you want to take your trade from. Okay, market has done the high here, the low. It has not done a high here, another low. So we want to know where will the market retrace to and sell again. Are you following me? So that's the next thing. So the first thing, I actually have a video where I explain the two kind of entries I use to take my trade. So the first one is fib. So I'm just going to draw from up to down, because I'm selling down to where the change of character is. See, my fib is actually edited. I can also show you how I edited the fib. If you're interested in knowing that, you can just type fib and I'll show you how I did it. But if you know how to do it, you can do it by yourself. So I use my fib, then from 0.5 to 0.6 where I'm looking out to take my trade, or I'll use this other block and extend it down, or just extend with the other block. It's within 0.5, 0.6. So so I can just put a line there and wait for market to come back to that level so I can take my trade. And let's see if market came back to that level. Okay, it came close to it, but let's see. Boom, it came to that level and then it sold, giving us about 3.7 hour. It sold more safe. It came down to about close to about 10 hour. So that's about 10 hour. So you see, but the best profitable risk to reward ratio to use should be 3 hour if you're just starting, so you can get to understand the strategy while you're also accumulating you're compounding your money. So 3 hour is the best thing to use for consistent executions. Okay, so this is just one easy way to just identify this. And I always say that if you want to be profitable as a trader, you need a system that is very, very simple so that you can stay consistent to it. Are you following me? So with that being said, if you're also serious in learning about trading, let's say you are new, or you actually dived into trading but you need an information to actually guide you through it to get consistent results, this is for you. Okay, I actually have a blueprint that's going to make you a confident, structured and profitable trader. No need for you to start going for big mentorship. Just send me a DM or just type interested in the comments if you want to further this information or you want to learn more, and I'll hit you up. So thank you so much guys for watching, and anticipate my next video. Stay tuned, bro.